Welcome to our presentation on the property tax cycle and property tax protection. I'm Blake Deal, and I'm the founder of Florida Homestead Check. I started Florida Homestead Check in 2019 after working as a real estate attorney in Florida for over 27 years. I started Florida Homestead Check because in doing thousands and thousands of closings, I kept realizing that most property owners in Florida just don't understand that there's an entire architecture with the law for property tax in Florida, and that there's a lot to know. If you just pay your property tax bill every year without paying attention to certain things, you're probably paying too much. And if you go and sell your house without paying attention to a list of things, you very likely can be giving up important savings that could be transferred to your next house. So I started Florida Homestead Check to help realtors, title companies, mortgage professionals, and the everyday person with being able to identify and take advantage of the many savings that there are under Florida's property tax laws. Unfortunately, it is a little bit complicated, and for 4 years, we have worked mostly with real estate professionals on helping them with these issues. We're excited to talk to you today about the property tax cycle and property tax protection because this is something that we've come up with for the everyday homeowner in Florida. It's extremely affordable. It's extremely easy to sign up and use. And I can summarize the whole thing by just telling you that the way that it works is we will tell the homeowner what they need to know when they need to know it. Otherwise, we won't bother them. We'll tell them when there's something that they need to do, when it's time for them to do it. Otherwise, we won't bother them. And we're available with our call center of highly trained property tax experts that I have personally trained that are available to help the homeowners with questions or if they need assistance in obtaining the savings that we identify. Our systems use cutting-edge artificial intelligence that accesses the Florida Department of Revenue tax databases, property appraiser databases, does market valuation analysis, and couples it all in with the in-depth analysis that I have built from my years of studying these subjects and identifying all the things that need to be looked at to attempt to get savings. So with that introduction, I'm really excited to tell you about property tax protection. This presentation, by the way, is intended for realtors, mortgage professionals, other real estate professionals, so that they will be familiar with property tax protection and can hopefully utilize it and provide it to, or at least tell their clients about it so that they can take advantage of it and enjoy the savings that they'll find. So with that, we'll dive into the presentation. The first thing we like to talk about is if you're a mortgage professional or if you're a realtor in Florida, you really want people to be moving into the state. It's what keeps the ball rolling. It's what keeps the transactions going, and it's what allows all of us in the real estate business to make a living. One of the things we really don't want to have happen is the inflow of immigration into Florida to stop. But I can tell you that one of the biggest things that we're beginning to hear, and you probably are beginning to hear it, is that people are really starting to get concerned about the amount of property taxes in Florida. And this graph just shows you really quickly that in Florida, you will pay almost as much in property taxes as you will paying off your mortgage over 30 years. And on average in Florida, property taxes are 4 to 5 times more than in other states. Insurance is also 3 to 4 times the cost in Florida of other states for auto and home insurance. So these are things that are very daunting. They're big surprises to people when they move down here. And we get a lot of calls and talk to a lot of people that feel like they're going to have to move out of the state because of these costs. So we really want to give you a way to help with this and get those costs down some. So next slide is our introduction to the issue. We like to use an example here. of what has happened over the last few years in Florida and why this has become such a big issue. After the Great Recession in 2008, the median home price in Lee County, Florida, was $89,000. Today, it is over $450,000. So if you look at what the property tax on that home was in 2008, it was about $800 a year. And today, it's about $8,000 a year. And that's taking into account the homestead exemption on the house. So look at that. Property taxes now on the median home in Lee County, Florida, have gone up 10 times since 2008. So that's in the last 15 years, a tenfold increase. Another thing we like to point out is that county property appraisers recently have been, they tell us, they were told this by the governor's office, to increase the assessed value percentage from 85 to 95%. The law in Florida in the past has been interpreted to say that the initial valuation should be at 85% of the fair market value of the property. But the way they're interpreting it now is to say that the actual statute says as much as an 85% 15% discount. So they're saying let's only give them a 5% and start assessing at 95%. And we have seen that become sort of the standard now. And the new assessments being at 95% instead of 85%. Making an even bigger issue. There's also the advent of artificial intelligence. People now are no longer going to get away with the things that they used to. For example, renting out a garage apartment could cost you your homestead status. There could be fees and penalties. So property taxes is a big issue already, and it's likely to continue to grow as an issue. So why are we having this presentation? Because there are things that can be done to keep your property taxes as low as possible. A lot of people think it just is what it is, but again, as I mentioned earlier, that's not true at all in Florida. So what can be done to keep your property taxes low? Well, you can minimize the initial assessment, which most people never even check on. You can make sure you file for Homestead, which, believe it or not, about 1 in 3 people don't. You can file for all the available exemptions. There's over 24 of them. Most people just know about 1 or 2. You can transfer portability. Most people don't even know what portability is, much less maximize it before the sale. And then you can monitor if values ever go down for a high assessed value situation like happened after the Great Recession in 2008. There's a lot of other things beyond this, but these are just big ones that I could give you as examples. So what is the property tax cycle? If you look here, we've got a little slide that shows all these little notifications that property tax protection sends out to help people as they move through the property tax cycle. But basically it begins when you purchase a home in Florida, and it ends really when you either die or you sell your home in Florida and move to another state. But it goes throughout the year, every year, and there are things that happen at certain dates that need to be paid attention to. There are certain things that need to be monitored, and it becomes extremely important if you are selling your home and buying another home in Florida. So a lot of people just don't realize that this cycle really exists, and you can pay attention to it or not pay attention to it. Most people don't, and if you don't, it's going to cost you. So these are just some examples of the type of things that you need to pay attention to. For example, July of the second year after your purchase is the first time you're going to see portability accrual. November, the second year after the purchase. Review of your tax bill and verification of eligible exemptions. End of the current tax cycle and start of a new one. You'll want to resubscribe to property tax protection, which we'll talk a little bit more about. Portability maximization becomes very important if you're going to sell an existing home. Exemptions change every year. These are just a few examples we picked out for this slide just to illustrate the different things that are important at the different times of the year. The next slide, is an example of proper homestead filing once the deed has been recorded. Did you maximize portability on the existing home? Did you transfer it in from a prior home? Did you file for all the exemptions that you could file for? This notification that we send out, it shows how the escrow account should have been set up and explain how banks often do it differently. I would say incorrectly. The way that it's typically done in Florida is the bank sets up the mortgage escrow account at an artificially low amount of money for the property taxes, many times based on the previous owner. And what happens is the following November after purchase, the November of the year after purchase, the homeowner gets an unpleasant surprise in the form of a letter from the bank saying, whoops, we underestimated your escrow account and you need to come up with a bunch of money and we're going to have to raise your payment. And we get upset phone calls from people all the time that have gotten those letters, and they just wish the escrow account had been set up correctly to begin with. So that's one of the things that we have done, is built a system called Smart Escrow that looks at really how should the escrow account be set up. And after a person has purchased a home that has signed up for property tax protection, it'll go over with them how their escrow account should look and how much should have been paid each month and put up front, so that they at least know when they get that letter that it's not a surprise. Next slide, evaluation of the year of purchase assessment. This is something that almost no one does. When people get that first trim notice, which comes not the year of the purchase, but the following year, they don't look to see was the first assessment correct or not. But that's something we'll review with them. We'll give them a heads up on what to expect in the property tax bill. We'll also review with them the tax proration at the time of purchase. A lot of times people forget about it, and the credit that they got at closing was incorrect, and they need to go back and do the reproration, which every real estate contract in Florida allows for tax reproration after the bill comes out. But this is just one of the many things that property tax protection does. We'll review the property tax bill with the person. I'm just going to click through these. These are just examples. July 1st, the year after purchase. November the 1st, the year after purchase. January 2nd, the year after purchase. July 2nd, the year after purchase. November the 2nd year after purchase. It goes on to the end of the tax cycle, which really we call that. It'll be the end of the second year after purchase, and then the tax cycle starts again on the following January the 1st. The only reason I'm showing you these slides, slipping through them really quickly, is so that you'll just realize we're not making all this stuff up. There is a lot of things that really need to be checked on, and most people just aren't doing it, and they're paying the price. So why is the property tax cycle important? We have learned, and it's the whole reason I started the company doing closings. I just kept seeing people making mistakes on this stuff, and it really hurting them. One of the most basic mistakes is people forget to file for Homestead. Homestead is huge. It keeps your property taxes from going up more than 3% a year. It allows you to build portability and transfer it. But we find that about 1 in 3 eligible homeowners never even file for it. I had a client the other day. He's a very wealthy gentleman, but he didn't file for Homestead after he built his new home, and his property tax bill now is about $85,000 a year. And if he had filed for Homestead, it only would have been about $37,000 a year. And I know that that's a huge number. Your typical person isn't living in a home of that value, but this guy, what a mistake, over $50,000 a year extra in property taxes that he's having to pay because of something that would have taken less than an hour to do. In the Latino world down in South Florida, we find that less than 10% of people file for Homestead. It's because they're often coming from other countries where there's a distrust of the government. They don't want to go to a government office and file for something that has to do with taxes. And so this is something we're really hoping to help with. And our products are bilingual. The Homestead checks are bilingual, and property tax protection is bilingual. So you can choose whether you want the information in English or in Spanish. So it'll hopefully help those folks that are coming from Spanish-speaking countries as well. Portability. Portability is just a huge subject. When people hear just the word, it tends to stress them out because they sort of know it's important. A lot of realtors and mortgage professionals, that is, but they really don't understand it. But if you fail to file to transfer portability that you've already earned, you can go back and get it if you forgot to file for it. You can, and a lot of people think there's like a 2-year time frame to be able to transfer it if you forgot. And believe it or not, it's still there as long as you figure it out before you sell. Before you sell your home, you really need to take a look and see if you can maximize the portability on it before it's sold. The way that the property appraisers run the system in the state, they will basically be a little bit recalcitrant or slow sometimes to raise the market value to where it should be after the first year of assessment. And that basically causes people not to get as much portability as they should get when they sell their home. The strategy in Florida basically is your first assessment you want to be as low as possible, but then after that you want your market value to increase, because portability is the difference between the market value and the assessed value. The assessed value can't go up any more than 3% a year if you file for Homestead, so that difference between the market value growing and the assessed value being clamped down, it will start earning you portability, which then as a number of years go by, you find yourself paying taxes on a much lower value than your home is worth. And then if you sell your home and move to another home in Florida, you can take those savings with you in the form of portability. You can have as much as $500,000 in portability. You really want to get in that $500,000 club if you can. It's the name of the game. And property tax protection will help you do that. Exemptions, there's over 24 of them. But it seems like no one knows anything about any of them other than just the standard $50,000 exemption. There are all kinds of exemptions for senior citizens, low-income people that they never identify, never realize that they could have taken advantage of. There's even an exemption in Florida that a person who's over 65 years old, whose home is a market value of less than $250,000, who has lived in their home for over 25 years and who earns an income of less than about $35,000, that they are completely exempt from having to pay any property taxes at all. It's called the super senior long-term exemption. And very, very few, probably less than 10 to 15% of senior citizens that are eligible for that ever file for it because they didn't know about it. But with property tax protection, for, as we're going to talk about, $10 a month, all these things will be found. So a property tax advocate is needed for every homeowner. That's the bottom line. People are just not going to figure this out on their own. By law, and most people don't know this, the county property appraisers get 10% of the collected tax as their budget. And it's from that budget they pay their expenses and their salaries. So you need to think of them kind of like the IRS. You know, they'll tell you the rules, but they're certainly not going to help you minimize your obligations. And if you depend on the county property appraiser to watch out for you, you're going to end up with low portability that's caused by them, quote, forgetting to raise the market value. You're going to end up not filing for exemptions that you're eligible for. For example, a deployed military person doesn't have to pay property taxes while they're deployed outside of the United States or its territories. And you wouldn't believe how many veterans. One of our salespeople is a Chinook helicopter pilot in the Army National Guard in Florida, and he went to his squadron and told them about this, and only 2 or 3 people in the entire squadron even knew about that property tax exemption. But boy, now they all know about it. And again, property tax protection is something that will figure all of this out. So an advocate is really needed, and that's what property tax protection is. It's looking out for you as your advocate, and that's what we're here for. A lot of people don't understand how low market value affects your portability, so we put a slide here to just give an example. If you look at this, when you see that the assessed value over time in the graph, the green line, is very low, and that's because if you file for Homestead, it can only go up 3% a year. But then you look at the purple line, your market value every year on January 1st is figured by the property appraiser, and he's supposed to actually come up with a market value. And the definition is really simple. It's what your home would sell for in a reasonable period of time in a free and open market. So the purple line is wavy because market values kind of level out sometimes and they spike up, but over time they generally go up. And as you can see in this graph, the purple line goes up above the green line, and that difference between the two is what we call your homestead savings, also known as portability. So in this example, you see a house that in 2008, when it was purchased, had a value of maybe $230,000, but then you see there that by 2019, the assessed value was up a little over $250, but the market value was up to almost $410. And so the difference between those two is what the portability is. But in our example here, very common situation, you've got an assessed value there of 220, and you've got a market value of 350 on the tax rolls, which means there's a difference of 130,000 in portability. But that market value is not where it should be. It should be up about $580,000 in our example. And so that means that the person really should have $360,000 in portability, not 130. And a lot of people think that they're saving money somehow if their market value is lower on the tax rolls than it really actually is. And that's because they're not understanding that you don't pay property taxes on your market value. You pay it on the assessed value. And since the assessed value can't go up more than 3% a year, you want the market value to go up. That's what creates your portability savings. So hopefully this slide kind of illustrates that very common situation that affects a lot of people who don't check on it and get it fixed before they sell their home. One of the things that property tax protection does is it monitors the value, and if it goes outside of the range it should be in, we'll notify the property owner and work with them on what needs to be done to correct the situation. So this slide is one that we just like to use as an example in case you really think the property appraiser is your friend. And in this example, it's one where the property appraiser in a Florida county, we're not going to say who it was, as you can see we have redacted the information, actually sent out a letter to a person that had their house listed on MLS and said, hey, there's this thing called portability. If you want to review the value or portability, give us a call. Now, how many people do you know would get a letter like that and, oh gosh, the tax man is sending me a letter saying something about call them if I want to review my value or portability? You know, who's going to do that? In this case, the person called me and asked about the letter. And it was very interesting to me because the reason that the property appraiser sent it out was this home was listed on MLS for over $3 million and had a value on the property appraiser's market value of less than half that amount. This person clearly should have had the maximum $500,000 in portability, but they only had about $100,000. And the property appraiser knew good and well that if this home closed without the person fixing the situation, that they were essentially stealing about $400,000 of that person's portability. So instead of doing what the law requires the property appraiser to do, which was just figure the correct market value every January 1st, this property appraiser sent this letter out to this homeowner as basically a CYA maneuver. So if the person found out they'd lost all this portability later, and you don't find it out until November of the second year after you buy your new property, when you get this way higher tax bill than you thought you were going to get, and then you find out you didn't get the portability you thought you had, and you call them up, you're upset, and they say, well, sorry, it's too late. You should have said something before you sold your home. And so this property appraiser has been called on this many, many times, and so they're sending these letters out so that they can say, well, we sent you this letter and you didn't respond. And again, what's so bad about this is the property appraiser is fully aware that they're stealing the portability, but instead of just giving the person the portability like they're required to do by law, they're sending this letter out and putting it on the homeowner to call them and have the portability adjusted. And it's not supposed to be that way, but we see this behavior a lot. It's just another reason why there is a need for an advocate. So property tax protection for realtors. This could also say for mortgage professionals. It works the same way either way, but it guarantees that the subscriber's property taxes will be kept as low as possible during the time they are enrolled, or their subscription money will be refunded. And so why are we telling realtors about this? Because it's something that can really help your clients and it can really help you. What does property tax protection include? It includes monitoring and alerts at each point in the property tax cycle. So we will let the customer know when they need to know something. It conducts a full property tax analysis over and over again to see when things go out of range or tolerance. And if we see that, then there's a call to action. We'll contact them and let them know what needs to be done and when, and they can either choose to do it themselves, or if they need us to help them, we will help them. Most of the help we give is at no additional charge. There are some things that are a little more involved that involve value adjustment board hearings. If the person's portability is low, it can be a little bit more complicated to fix. And those things we'll fix on a contingency fee basis, which is very reasonable. If the person receives the tax savings that we promised, then we get for the first year half of those savings, and they get it for the rest of their life. And when you run the numbers, you'll see we're doing an enormous amount of work for not a huge amount of money, and it is a great service that's a huge value when people need it. Okay, so what's the pricing for property tax protection? If you subscribe by the month, it's $10 a month, billed each month. If you pay up front for the whole year, it's only $99, which is about a 20% discount. If you sign up, the subscription is required for a year. We do a lot of analysis and provide a lot of information that is worth a lot more than $10. So you can't just subscribe for a month and get all the analysis and information and then cancel it the next month because we've provided a lot of upfront value. So if you cancel, you still pay for the whole year, the total of $120. Realtors who sign up for property tax protection on their own home get a 25% discount. It's only $8 a month. If you're a realtor and you're interested in signing up, just contact us and we'll provide you with a special code that you can use to get that discount. If you are at a presentation with one of our sales representatives today, they will be able to give you that code so you can use it today. Again, it's a minimum 1-year subscription required. Why should a realtor sign their client up for property tax protection? You're going to really want to after I tell you why. Number one, you're going to protect your client from paying too much money in property taxes. Number two, it takes away your need to explain any of this beyond a basic level. You can just say, hey, this stuff is complicated. There's a lot to it. And by signing up for this property tax protection, you don't have to worry about it. You're protected. And it gives them someone for the client to call and ask questions or get help if they need it. There's some other important benefits. It's a great marketing opportunity for realtors. If you sign your client up for property tax protection, maybe you do that instead or together with giving them a fruit basket or a gift basket or a bottle of wine at the closing table. If you sign them up for property tax protection, then you will be able to, you'll have a dashboard that you can go to in an account, and you can upload your picture and your logo, like you see in our example here, this fictitious Rebecca Williams, and your logo and picture and phone number will show up on the notifications that these folks get. And if they renew their subscription, this is something, and they probably will, they will be seeing you and your information far, far into the future. And if you're a realtor, what do you do to be a successful realtor? You build a network, you build a book of business, and you do that so that when people are thinking about buying or selling a home, or their friend or their uncle or their mom or dad are thinking about buying or selling a home, you're really hoping that they remember you. And how do they remember you? Well, first, you do a great job, but also you keep yourself in their mind. And you want to do that by making contact with them every so often. But it's kind of hard, as you know, to just pick up the phone and call the customer 2 or 3 times a year and just check in and go, hey, how are you doing? This is Rebecca. And I was just checking in, see how things are going. And is anyone that you know buying or selling a home? After the first or second phone call, that's going to become annoying. But when they get these notices from Property Tax Protection and your name and information is on there, they may use it as a reason to reach out and call you. And if they do, you can just say, oh, yeah, this is why I got this for you. This is really important. Read it carefully, pay attention to it, and call them if you have any questions. Again, you don't need to explain it at any more than a very basic level, but it either triggers them to call you, or you can look at your dashboard and you can see what notifications have gone out to people that you signed up for property tax protection. And you can see when they got the notification, and you can use that as an excuse for you to give them a call and say, hey, I just wanted to make sure that you got that notification the other day about your first truth and millage rate notice after the purchase of the property, and that's really important, and I hope you really looked at it, and that's why I got you this property tax protection, and I'm here for you, and by the way, if anybody's buying or selling a home, I'd love to get to work with them, and I'd appreciate a referral if you're willing. And it's just a great excuse to make that contact, and it either prompts you to do it, or you may hear from them every so often. It's a wonderful way to stay in touch with your clients. Now, if they sign up for property tax protection because they saw it on a billboard or they heard about it on the radio or the TV, then you're going to lose that opportunity, and they'll have their notifications come to them without your information on there. But if you, as their realtor, when you're working with them as the buyer, or if you're working with them as the seller, that's your opportunity. When you know the deal's going to close, just go online to propertytaxprotection.com and sign them up. It generates a certificate that you can then print out and take to the closing and give to them in a nice envelope or something and say, hey, I got this for you. And be sure that after the closing, you activate the subscription so that you get this protection. And as long as they activate it, it'll happen. And you can look on your dashboard and see if there are certificates that haven't been activated. And if not, you can remind them that they need to be activated. And if they, are just dense or something, or don't want it and don't activate it, then you can give them a couple notices, and then you can click on it and regenerate the code so that you could give that certificate to someone else. So you won't ever be wasting your money. So that's kind of how it works from a marketing standpoint. And again, that's something that can go on and on into the future. This is just an example of how your dashboard looks, where you can see there the ad recipients. You can buy a new subscription. You can message our support team. You can generate a sign-up link, and it'll show the notifications that have gone out. You can click and see who's gotten a notification and when they got it, and then you can use that, like I said, as an excuse to reach out to them and touch base with them and make sure they don't forget about you. So these are just examples of kind of how some of the notifications look when they go out. Nice artwork on them, very important information. It pulls in all kinds of data and information that they're going to need to know, and analysis that will keep them up to date. Again, we tell them what they need to know when they need to know it, and we tell them what they need to do only when they need to do it. Otherwise, we're not bothering them. Our recommendation for realtors is, first of all, if you own a home, I would make sure that you enroll in property tax protection. Visit propertytaxprotection.com. And if you enroll, again, in the next 24 hours after you've received a live presentation from one of our salespeople, you can use the coupon code to get the 20% discount, which will give you $8 a month or $79 a year. If you are watching this presentation online from our website or somewhere else, you can contact us to be able to get that code by simply calling Sun Tax Save. That's our number, SUNTAXSAVE, Sun Tax Save. And you can speak to one of our representatives. They'll verify your real estate license and give you the discount if you would like to sign yourself up. Like we mentioned, we highly recommend you enroll your buyers or sellers in property tax protection. You can print the certificate to give to them and consider it in lieu of or in addition to another typical closing gift that you might give. And just keep in mind, you'll be on those notifications as far out as they stay enrolled. The last thing we wanted to mention to you is one of the most important things that a realtor can do is if you're going to list someone's property and help them sell the property, is to check their portability as early in the process as possible. So we've created a tool called Portability Pros that you can use really easily to check. It's at portabilitypros.com. And all you need to do is put in the amount that you reasonably think the home is going to sell for and the address. And then we will access the databases and tell you if the portability is okay or not. And if it's not, it gives you this little report, which you can print out. And you can take that at your listing appointment and say, hey, just to let you know, I checked your portability. It looks like it's low. You really should call these people to get them to help you, whether you want to or not. At least you'll know what you're walking away from if you don't do it. If you want to figure the portability manually, you're welcome to. Just go to the county property appraisers page and subtract their assessed value from the market value on the tax rolls. Then look at the market value on the tax rolls and see if you think that it's somewhere about 85 to 95% of what you think the home is actually going to sell for. If the market value is lower than that, then that means they're leaving portability on the table. Portability Pros is $10. It'll save you that money if you learn to do it yourself. But if you just use Portability Pros, you don't have to worry about it, and you can generate this report, which is nice to be able to give them. If you buy our Homestead Toolkit, it gives unlimited Portability Pros usage for $175 a year. You can use it as much as you want, as well as quite a few of our other products. That's available at homesteadtoolkit.com. Now, we didn't want to confuse you after telling you about property tax protection with telling you about these other things. But unfortunately, the realtor who is listing the house is the person that has the earliest opportunity to identify if portability is low. So we wanted to give you a tool with Portability Pros to be able to check that. And the earlier it is discovered and the earlier someone starts helping them, the better. There is a note or two that it's a really good idea to put in MLS if you're going to need to fix portability. There's an addendum to the contract that really should be used, and there's a form that needs to be signed at the closing table. Portability is normally something that will not be able to be fixed before closing. It has to get fixed. You can start on it basically in August of every year, the way the tax calendars work. So it won't ever affect or hold up the closing, but because it has to get fixed after the closing, if it's something you don't find out about until you're selling the home, then it's really important to do these things we're suggesting. And we're glad to help with those things. Again, you can call Sun Tax Save if you're in that situation, but we really want you to know that Portability Pros is available, and we really want you to use it before that listing appointment so that you identify if someone has low portability. So in closing, we just want to say, don't worry, be happy. There's property taxes. There's more to it than people think, and anyone can study and learn about all this and do it themselves. Or for just $10 a month, they can have it all handled for them by a bunch of professionals that really know what they're doing over here at Florida Homestead Check. So we hope you sign up today at propertytaxprotection.com. If you're at a live presentation, we'll provide you with the sign-up code if you want the 20% discount, if you want to sign up on your own home. Or like I said, you can contact us at Sun Tax Save, and we'll verify your real estate license and give you a code if you would like to have that discount. Thank you very much for listening to us. I hope you've enjoyed the presentation, and we hope to see you on our subscriber list along with your customers very soon. Because our goal here at Florida Homestead Check is one thing, and that is to help Floridians minimize their property tax bills. We hope that you'll work along with us to be part of the solution. Have a great day.